Carl, this is another attempt by China to break out small cap, high-tech companies from the rest of the pack and give them a little platform to work on. It's not the first time it's been done, however. So what is it that we're dealing with? It's called the STAR market. It is a science and technology innovation board. That's the important thing. There are 25 companies in there. There'll be a lot more. It's a first-day gains. You heard from Carl, anywhere from 84 to 400%. That's not a typo, 400%. I'll show you one of them. And simply put, there are fewer listing requirements than on the bigger boards and on the Shanghai, which is where it's a sub-index, essentially, in the Shanghai. How did it do today? Well, China was mostly down today. Hang Seng, in Hong Kong, there's been a lot of concerns about the demonstrations impacting things. So Hang Seng's down. Shanghai's down. That's interesting. And likely they were selling big-cap Shanghai stocks to buy those IPOs today that got a lot of attention on very heavy volume here. What about the market? Why is this of interest right now? Remember, a lot of Chinese companies like Alibaba, they listed here in the United States. The Chinese noticed that. They're trying to figure out ways to get more Chinese companies to list from overseas back here to the United States. Private companies have a very tough time raising capital in China. Remember, you have these state-owned enterprises, government-backed there. The banks lend to those state-owned enterprises because it's no risk. They're owned by the government, essentially. The smaller companies, not backed by anybody, they have a lot tougher time, and that's the bottom line. Just let me show you one before I let you go. Anji Microelectronics, semiconductor products, up 404%. Carl, they tried this before. Remember, a few years ago, about 10 years ago, they had a separate listing exchange. That was the Chinex on the Shenzhen. Still hasn't attracted a lot of attention. That was the Nasdaq back then. We'll see if this one succeeds.